Hi, I'm Lori McMortgage, and since 1996, I've been helping families buy homes when they didn't have the cash to pay for it by providing home mortgage financing. One of my favorite things about the job is that I get to learn something new every day. Guidelines are constantly changing, and no two applications are the same. So, if you'd like to learn more about the exciting world of mortgage financing, please keep watching, and I hope you enjoy.
If you've been thinking that now is the time to get a reverse mortgage for yourself, or if you have questions about the reverse mortgage option for your parents or someone you know, then you want to watch this video. Reverse mortgages are a type of real estate financing, but they work differently from other home loans. A reverse mortgage lets you borrow money from the equity in your house without any monthly payments on a home loan. You still have to pay for your property taxes and homeowner's insurance, but the mortgage is repaid when the house is sold or the property owner passes away. Many of the rules and standards associated with most home loans simply don't apply to reverse mortgages. Let's look at the basic requirements of the reverse mortgage. The first, most important requirement is that you can only get a Federal Housing Administration or FHA reverse mortgage if you're 62 years and older. Nearly all reverse mortgages are insured through the Federal Housing Administration. The FHA calls reverse mortgages home equity conversion mortgages, or HECMs. You largely qualify for a reverse mortgage on the basis of the equity in your home. The amount you can borrow on a reverse mortgage will depend on the borrower's age, interest rate, whether the rate is fixed or adjustable, and the property's value. Monthly payments for principal and interest are not required. Borrowers are required to pay property taxes, homeowner's insurance. The loan is repaid when the borrower moves, sells a property, or passes away. An FHA-backed HECM is a non-recourse loan, so the loan is secured by the property's value and not the borrower's assets. So what's the qualification requirements for a reverse mortgage? The amount that will be available for withdrawal on a HECM loan or a reverse mortgage will vary by borrower and depends on, first, the age of the youngest borrower or eligible non-borrowing spouse, second, the current interest rate, and third, the lesser of the appraised value or the HECM FHA mortgage limits or the sales price. If there is more than one borrower and no eligible non-borrowing spouse, the age of the youngest borrower is used to determine the amount you can borrow. You can use a HECM to purchase a primary residence if you are able to use cash on hand to pay the difference between the HECM proceeds and the sales price plus closing costs for the property you are purchasing. There are financial requirements with a reverse mortgage, but they are not as stringent as a standard mortgage. Your lender will verify your income, assets, monthly living expenses, and credit history. They will also verify that you have had timely payments on your property taxes, and hazard and flood insurance premiums will be verified. You can pay for most of the costs of a HECM by financing them and having them paid from the proceeds of the loan. Financing the costs means that you do not have to pay for them out of your pocket. The HECM loan includes several fees and charges, including mortgage insurance premiums, both an initial and annual premium, third-party charges, origination fees, interest, and servicing fees. Your lender will discuss which fees and charges are mandatory. So how do you pay off a reverse mortgage? A reverse mortgage is a form of debt that grows every month. So how do you pay it off? First, a reverse mortgage only needs to be repaid when one of these things happens. The property is sold, the borrower moves, or repayment is due because the borrower has passed away. What if the remaining loan balance is more than the value of the property? An FHA-backed reverse, or HECM, is non-recourse financing. This means that the debt is secured by the value of the home and nothing else. If the value of the property is not sufficient to repay the debt, then the difference is paid by the FHA insurance program. If you're considering a reverse mortgage, your first step will be to speak with a mortgage professional. They can help you understand the reverse mortgage and decide if it is a good option for you.
Hi, I'm Lori McMortgage, and I help people buy homes when they don't have the cash to pay for it. If it's your first home, your next home, or your rental home, my team and I will make sure you have the right financing in place and the process is smooth and easy. Thank you so much for watching today. I hope you enjoyed the video, and please reach out to us at the information provided. We can't wait to talk to you.